Taxable personal property as a category includes all tangible items that are not real property. Real property is land and all buildings and other things on or attached to the land. Personal property has often been referred to or defined as movable, tangible items that are not firmly attached to land or buildings and are not specially designed for or of such a size and bulk to be considered part of the real estate. This includes, for example, merchandise, furniture, machinery, tools, animals, and equipment. In Massachusetts, local property taxes are only assessed on tangible personal property. Intangible personal property, such as cash, stocks, and bonds, is exempt from local taxation. Note that the distinction between personal and real property is not always clear-cut. Some personal property items may be considered part of the real estate because they are firmly attached to or integrated into the land or buildings due to their bulk, special design, intended permanence and use. That is, they are specifically designed for the particular real estate. For example, a movable lunch cart resting on concrete blocks against a wall was held to be real property. Another example was a boat railway powered by a steam engine, designed to lift a boat out of the water and onto a dry dock. It was considered real estate because it was customized to fit a particular geographic site. Oftentimes, things like electrical generating equipment will be treated as personal property so it can be assessed to its owner instead of the owner of the real estate on which the equipment is located. Note that unlike real estate, no lien attaches to personal property upon assessment of the tax. For that reason, you may want to assess items of personal property that can be treated as either personal or real property as part of the real estate tax. If the taxes are unpaid, the real estate can be taken into tax title and eventually sold to collect the tax after a proceeding in land court to foreclose the owner's rights to pay and redeem. This gives your community an additional and more effective remedy for collecting the tax. All personal property situated in Massachusetts on the January 1 assessment date is subject to tax, unless specifically exempt by law. In addition, personal property owned by a Massachusetts resident or business that is temporarily located outside Massachusetts on January 1 is also taxable unless an exemption applies. Property is situated where it is physically located on January 1 with the owner's intention that it remain with some degree of permanence. Property that is frequently moved from place to place or intended for use temporarily at different places is considered situated where the owner resides, or if business personal property, where the owner has a principal place of business. The city or town where personal property is situated on the January 1 assessment date assesses the tax. If the property is not situated anywhere in particular, the tax is assessed by the city or town where the owner's home, or if business personal property, the owner's principal place of business, is located. However, some items of property aren't necessarily situated anywhere on January 1. Personal property which is continuously in motion presents unique problems in pinpointing situs, that is, the place to which, for purposes of legal jurisdiction or taxation, a property belongs. For example, commercial aircraft spend some time in many jurisdictions. Special rules apply in determining where and how to assess these items in a city or town with a commercial airport. The planes are taxed based on the percentage of time they are present in the city or town in the year. This is determined by calculating the percentage of time they are present during one or more representative periods during the year, which must last at least a week. As with real estate, the owner of the personal property on the January 1 assessment date is generally the person or entity assessed the tax. You can assess any or all of joint owners who share undivided interest in the property. Each joint owner is liable for the entire amount of tax. Partnership property is assessed in the name of the partnership, but all partners are liable for the entire amount of the tax. Where the owner has died, you assess to the estate of the decedent and the personal representative of the estate after the representative is appointed by the probate court. You may also assess property to the person or entity in possession of the personal property in some cases. Specifically, you may assess to the person or entity in possession of leased property, machinery used in the conduct of business, or machinery used in manufacture or to supply or distribute water. You make a single assessment of all personal property a taxpayer owns that is taxable by your city or town, even if located at more than one place within the community. The property owner gets one assessment and bill for all its taxable personal property in the municipality. Although personal property is generally taxable, there are a number of exemptions that apply based on specific factors. The primary factor is the legal form or entity status of the owner. As a general rule, individuals and unincorporated entities such as partnerships, limited liability companies, associations, and business trusts are taxable on most of their personal property. Corporations have broader exemptions from local property taxes because they may be taxed at the state level instead. Also, note that Massachusetts adopts the federal tax status of unincorporated entities for state and local taxation purposes. If the entity files federally as a corporation, it is treated as a corporation for personal property taxes as well. Let's review what we have learned in this lesson. Taxable personal property as a category includes all tangible items which are not real property and are movable. All personal property that is situated in Massachusetts on the January 1 assessment date is taxable unless it is exempted by law. There are a number of exemptions. Generally speaking, the tax is assessed by the city or town where the taxable personal property is located on January 1. In addition, the owner of the property is generally the party assessed the tax. Assessors make a single assessment for all personal property taxable to its owner. The taxable or exempt status of personal property depends in large measure on whether the owner is an individual, unincorporated entity, or corporate entity.